Hello, welcome. This is Business Week coming to you from our studios here in Lagos, the nation's commercial capital. I am Frank Omalape. Here's what's coming up on Business Week in a moment. Nigeria, Germany signed a 500 million naira investment agreement in renewable energy and the oil and gas sector as President Tinubu assured investors safety of their funds. Plus, the federal government finalizes plans to re-establish a national shipping line through a strategic public-private partnership set to explore estimated $10 billion annual ship charter market within the country. And finally, U.S. existing home sales dropped in October to the lowest level in more than 13 years by 4.1% and 14.6% on a year-on-year basis. Of these and many more are what to expect on the show today. Well, thank you for joining us, everyone. Let's begin with major stories that made headline in the course of the week. President Bola Tinubu has again assured international investors that their money is safe within the borders of the country. The president disclosed this during a panel discussion titled Fostering Local Value Chains and Investment in Africa, the role of the German private sector at the G20 Compact with Africa Economic Conference in Berlin. The president assured investors that Nigeria has a large market and is ready to leverage all its advantages to become successful. German Federal Chancellor Mr. Olaf Scholz expressed readiness, but with an acknowledgement of the need to resolve administrative and financial hurdles emanating from prior administration in the sector.
A democracy should be, if we fight for it, yes, it is now very flexible and resilient in Nigeria, be assured. Shake off the military era syndrome. Shake that off. You might have all other news from sections of Africa, but for Nigeria, democracy is there, is here, and we are partners. Nigeria voted for me for reforms. And from day one of my inauguration, I started the reform. Yes, it could be difficult in the past to do business in Nigeria, in Africa as a whole. But to any foresight and progressive business thinkers, to ignore the largest economy in Africa is not the solution to your progressive side.
And away from there now, the federal government has finalized plans to reestablish a national shipping line through strategic public-private partnership to capture substantial share of the estimated $10 billion annual ship charter market within the country. The Minister of Marine and Blue Economy, Mr. Boyega Oyetola, revealed this in Lagos during the inaugural stakeholders roundtable engagement on advancing sustainable development in Nigeria's marine and blue economy sector. TVC News correspondent Ifunanya has more.
The purpose of the forum was to convene key stakeholders in the sector, fostering discussions and devising a roadmap to unlock the industry's potential, encourage sustainable blue economy investment, and enhance global competitiveness. The Minister of the Marine and Blue Economy, Mr. Boyega Oyetola, emphasized the significance of strengthening blue governance, transforming port operations, and enhancing port infrastructure as key focal points for discussion during the roundtable.
It is worth noting that this engagement forum is crucial to the development of the sector as it offers the opportunity for us all to collectively contribute our perspectives, ideas, and offer relevant inputs that can propel the sector to the trajectory of success necessary to support the development of the economy.
In addressing collaborative efforts, he underscored the transformative impact expected from the synergy between the private sector's efficiency and the public sector's oversight. According to him, the collaboration is expected to generate substantial job opportunities, facilitate increased trade and investment, and foster growth in the marine and blue economy.
This ministry's decision to consider The reestablishment of a national shipping line through a strategic PPP arrangement is born out of our desire to capture a substantial share of the estimated $10 billion annual ship charter market within the country.
The ministry's permanent secretary further emphasized the collaborative and forward-looking approach adopted by the ministry to propel sector development.
This stakeholders forum has been designed for us to inform, equip, and enable us to share knowledge on critical issues affecting the maritime sector, particularly as the new administration has seen fit to showcase the potentials of the marine and blue economy, as well as analysis opportunities for the benefit of Nigerians.
The roundtable engagement anticipates the formulation of a communique that will serve as a comprehensive blueprint for the future development of the marine and blue economy sector. Ifunanya Eze, TVC News, Lagos.
And to some other stories, the Federation Account Allocation Committee has shared about 906.96 billion naira as revenue to the three tiers of government, federal, state and local governments in October 2023. This was disclosed in a communique by the Director of Press and Public Relations of the Ministry of Finance, Mr. Stephen Kilebi. According to the communique, the 906.95 billion naira revenue is a part of the Federation's 1.35 trillion naira total revenue generated in October. The federal government received about 323.35 billion, while the state received 307.71 billion naira. The local government councils received 225.2 billion naira, while the oil producing state received 50.6 billion naira as derivation. The total figure shared for October represents an increase of 3.48 billion naira compared to 903.48 billion naira shared in September 2023. And outside Nigeria, U.S. existing home sales dropped to the lowest level in more than 13 years in October by 4.1% and 14.6% on a year-on-year basis, as the highest mortgage rates in 2 decades of houses drove buyers from the market. The report from the National Association of Realtors showed that the median house price last month was the highest for any October, bearing a rebound in November and December. Home sales this year are on track for the worst performance since 1992. According to data from mortgage finance agency Freddie Mac, the rate on the popular 30-year fixed-rate mortgage average is 7.31% in the final week of September, before peaking at 7.75% in late October, the highest level since November 2000. Well, those were some of the biggest stories in Business Week. You're still watching Business Week, coming to you from our studios. Still to come after the break, Nigeria, Germany signed a $500 million investment agreement in renewable energy and the oil and gas sector, as President Tinubu assured investors safety of their funds. That's in a moment. Please stay with us. Thank you, everyone. Let's get into the conversation for today. President Bola Tinubu has again assured international investors that their money is still within the borders of the country. The president disclosed it during a panel discussion on the sideline of the G20 Compact with Africa Economic Conference in Berlin, Germany. The president assured investors that Nigeria has a large market and is ready to leverage all its advantages to become successful. However, German Federal Chancellor Mr. Olaf Scholz expressed readiness, but with an acknowledgement of the need to resolve administrative and financial hurdles emanating from prior administration in the sector. Meanwhile, in a significant move to strengthen economic ties, Nigerian and German companies have sealed 2 key agreements in Berlin valued about $500 million. For more insight now, let's get into the conversation now. So make sense of this development. Dumebi Oluwole, an economist and analyst at STS. He joins us now. Thank you for joining us, Dumebi. We appreciate your time. Let's get into the conversation now. President Tinubu has been doing some investment shopping with different summits since he took the reins of power. So the recent being the G20 summit in Berlin. How well is Nigeria maximizing these windows of opportunities? Let's get started from there.
Well, I would say that we are fairly taking advantage of them. Simply because for you to actually for an economy to actually take advantage of the investment opportunities that exist globally, you have to have done your homework from within. And by homework from within, I mean attending to the structural issues that affect the economy. So you're in a better position to negotiate and seek for additional aid and, foreign investments. So in terms of foreign investment, you have to be attractive enough, especially in the kind of lukewarm investment climate that we have today. So we know, like, from the global environment, global inflation has been high. The global economy has shrunk significantly in terms of GDP growth, and so based off of all of this, several economies are taking more of a protectionist stance towards building their economies first, and then lending their support to other African and emerging markets. The other flip side to it is, because of the global interest rate environment, investors are more tilted towards higher yields in advanced economies than emerging markets and frontier markets like Nigerian economy. So essentially, you have to be attractive enough. So the economy is like playing catch up, to the global dynamics, just so that they're able to attract investment inflows and look favorable enough to the global investment climate. So essentially, I would say we're failing doing so because we still have a lot of, structural issues to attend to that are not putting us exactly in the best light for investment options.
All right, well said. The assurance from the president at the summit assuring investors safety of their funds looks like a blank check, if I may put it that way, to investors to write their own story as they want to see it. And this is because the German Chancellor, Olaf Scholz, did raise concerns about administrative hurdles. So what would you consider the most pressing administrative and financial hurdles that Nigeria needs to address to attract potential investors into the country?
I mean, they're cut into two ways. The administrative hurdles are almost completely different from the financial hurdles, though they are interconnected in some way. I'll start with the financial hurdles. The financial hurdles simply are, one, not just generating enough revenue. Our major sources of revenue, especially for dollar inflows, which are crude oil, non-oil exports, we're not seeing significant revenue, coming in from those areas. Even though oil production has, been picking up gradually, it's still not up to the OPEC benchmark, about 1.7 million barrels per day, or even our initial peak of about 2 million barrels per day about a few years ago. So we're still producing significantly below our capacity and potential, and that is creeping into our ability to generate as much revenue as possible. So that's on the financial side. We're not generating enough revenue. Forex inflows are not coming in as much as would like. If anything, we're seeing a lot of capital outflows, especially from foreign portfolio investors. So that is, significantly affecting our revenue prospects and our revenue potential. So that's on the financial side of things. Then on the administrative side, there you're looking more on the caliber of spending, the content of government expenditure, and what that does and how that signals, and kind of signals rather this, pushes to investors and the global investment climate generally. So essentially, we're not spending in the right places, because the idea behind the administrative part of government is the government is not the one to push economic growth. What they do is they're a catalyst for that. And that comes by creating an enabling environment to support businesses that will then support this economic growth. And unfortunately, we've been seeing the reverse with the Nigerian economy, where the government significantly prioritizes administrative expenses, that's recurrent expenditure, over capital expenditure. We always supersede our recurrent expenses, but never even meet our capital expenditure targets, especially in actual terms. And a very I wouldn't completely say an unfortunate incident, but I would say in this tight tight liquidity environment that we're experiencing today and the painful reforms that the average Nigerian is going through, we saw the supplementary budget that the federal government came about with, and it was very contentious, very unconventional, and it still, has that feel that the government is still not spending meaningfully on things that they are supposed to. An example is the budget for the yachts, for the presidential yachts, is significantly more than the budget for the Ikorodu-Shagam road construction, and that just tells where the government's priorities lie. And unfortunately, what this does is it negatively signals to the investment to potential investors that Nigerian government is really not ready for the kind of investments that we need to propel economic growth. Nigeria has an infrastructure deficit of over $3 trillion, at least according to the World Bank, and it will take us 30 years to significantly bridge this gap. And unfortunately, the decline in government expenditure to these crucial parts of the economy, what it does is it just simply tells investors that we're not doing the right thing, and it will continually deter the investment behavior, towards the Nigerian economy, even though good prospects come about.
Well, I know you talked about the fact that the budget for the yacht has, was really out of way. But I do know that the budget for that yacht has been redirected to student loans anyway. But we'll get back to this point in a moment. At the summit again, the president did talk about market potential and the country. So how do you see Nigeria effectively leveraging its large market and abundant resources to attract or see more deals from such foreign investment?
Yeah, that's a very good question. I would say that I'll split it in two ways. The first one is the opportunities that lie with the consumer markets for Nigeria. The other is the illusion that exists with Nigeria's market size. So, and I'll start with the elusive part. The first one on the illusion is, number one, there is that notion that because Nigeria has a very large population, that equates to a large consumer market. But in actual fact, that's not true. What we've seen over time is the income bracket, especially due to higher inflationary pressures, has significantly thinned out Nigeria's consumer markets. So what you have is a stronger upper income bracket and a significantly lower and poorer income class. So that stratification has significantly downsized Nigeria's consumer markets, and that's something that businesses and investors are still struggling to understand, especially when it comes to Nigeria's consumer markets. So, but that being said, there are still bright spots with Nigeria's consumer market. And number one thing that this does for investors or even businesses looking to set up shop in Nigeria is that, number one, the young demography of Nigeria does significantly have a positive impact on the growth potential of Nigeria's consumer market. Nigeria's median age is about 18.1 years. And what this tells you is that over time, the consumer market will keep growing too, and that will increase spending power, because as people increase by age, so does their spending and their income capacity. So the marginal propensity to consume and also marginal propensity to save will increase as the age bracket continues to expand, particularly because of Nigeria's young demography. The other thing is understanding the consumer market, knowing that Nigeria's consumer market now is significantly fragmented into the upper income and the lower income. This helps businesses to come up with better market segmentation and product differentiation strategies to suit either the lower end of the consumer market or the upper end of the consumer market. So now it sits on the desk of the investor or the business owner to strategize on what consumer class they want to satisfy, because Nigeria's middle income class is significantly shrinking because of higher inflationary pressures. So those are the two ways that I look at it. There is that market potential in the future, where we're hoping that the structural reforms, will significantly unlock consumer spending if we stick to them. There is that bright spot that exists, and then we're looking at the young demography as well that will continually to just keep spending, and that increases the market size potential for Nigeria. But on the other spectrum of things, we also businesses and investors also need to consider that the true potential or the true value of Nigeria's market in terms of consumer spending has significantly declined, especially due to inflationary pressures.
So with regards to consumer market you talked about, let's explore more on the significance of Nigeria's large market size. What sector or industry specifically do you think the country needs to maximize, especially in the face of diversification drive of the federal government?
Yeah, I mean the key thing is industries, right? With over time we've seen successful templates in Asia and in Latin America. Case studies: Singapore, Japan, China, India, Brazil. All of these markets have adopted almost the exact same industrial revolution model, and this has significantly worked for them. Although we also consider the uniqueness of the Nigerian economy in terms of structural issues, that is exactly why we're saying you have to start first by trying to boost productivity, and from there on, the ways we can actually unlock this productivity is by focusing on the industrial sector. And what this means is you have to start from the beginning of the value chain, which is the agricultural sector. And the reason why we do that is because from the agricultural sector, we get the raw materials that should feed into the industrial sector that would aid the kind of growth that we're looking for. So starting with the agricultural sector, we already know this. We have buoyant natural resources. And the key thing here for Nigeria is to focus on the resources that we have comparative advantage in. And by comparative advantage, what this means is it takes you less cost to produce these commodities. And what are these commodities that we currently have this low, we have this good comparative advantage in? We already have cocoa, cashew, sesame seeds. Those are the and a host of other commodities. So if we're able to boost the value chain of these commodities, we will definitely see an improvement in Nigeria's economic growth. And this just branches out into, number one, increasing employment opportunities, because from the value chain of just one commodity, you have several branches of employment levels that could come in, or job opportunities that could come in. And it also encourages other businesses to come into that particular sector. We could use the palm oil sector as an example. Imagine if we have more processing companies for palm oil. Well, Nigeria would be able to significantly tap into the global market for that in terms of exports. And not only that, we'll be able to substantially satisfy local demand, because there's a huge supply gap for almost all agricultural commodities that Nigeria possesses. So the key is to unlock productivity, and the way to unlock productivity is to focus on industrialization.
Well, finally, before I let you go, Dumebi, Nigerian and German companies sealed 2 key agreements in Berlin, which is valued at $500 million US. The 2 big winner sectors in this scenario include the banking and the oil and gas. And I know you made mention of forex liquidity. How much impact will this have on the economy, since these funds are expected to come in through forex inflows?
In terms of the forex inflows that would come in, because this is supposed to be targeted, because this is targeted towards particular sectors, we might not see a significant bump in Nigeria's forex reserves where the CBN draws down to support the currency. But we might see just a minimal bump in reserves, and this might just help stabilize the currency to an extent. But then again, there are a lot more. The Nigeria's forex issues are hydra-headed, right? Our net foreign reserves are projected at a lower amount than what the CBN is projecting. The CBN's transparency and credibility also comes into question there. It is one of the reasons why speculators continually attack the currency by going long on dollar positions. Then we also have the fact that forex inflows are just not sufficient. And even when it seems like it is, the supply of forex to the official window is not substantial, and it's also not consistent in terms of magnitude. So that continues to fuel forex supply concerns and aids and further causes the naira to depreciate. So while the money would come in, forex inflows, it is supposed to be targeted to a particular sector. And even if we're going to pull in from that fund to support foreign reserves that would then feed into stabilizing the exchange rate, it will be very temporary, because Nigeria does right now need like lump sum dollar inflows to consistently and substantially intervene in the forex market to support the naira. And this also has its own problems, because it will if we decide to significantly, if the CBN decides to be more interventionist in the forex market post FX reforms and liberalization, it does send some level of mixed signals to the forex market participants that, okay, are we going back to where we're coming from in terms of multiple exchange rate systems and a very interventionist CBN? Or are we just doing this temporarily, to aid the currency, which is expected when certain reforms happen, like what Nigeria has done today? This happened in Asia in 1997. So is the investors are weighing both scenarios, and the only thing that would help to completely break that barrier of the mixed sentiments is transparency and credibility from the Apex Bank. If the investors don't get that transparency in terms of the CBN's interventionist approach, in terms of how long they plan to do it, by how much they plan to do it, they will continue to feel those negative sentiments and speculate on the currency. So so that's how I see it playing out for Nigeria's forex market.
Well, I think we'll just have to leave it there. Thank you so much for your time. Dumebi Oluwole is an economics analyst at Steers. Thank you for joining us on the program.
Thank you. Thank you so much for having me.
Well, and of course, that's our show this week. Thank you for watching. We'll be back again next week. I am Frank Omalape. I'll see you again.